Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within company filings. And today we are looking at Hyperfine Incorporated, and folks, get ready because this company is making some serious moves in the public markets. Before we dive in, if you're someone who likes getting the real story behind the corporate jargon, do us both a favor and hit that subscribe button. And if you want to connect with other finance enthusiasts and get even more exclusive content, our Discord community link is in the description below, so join us there. Alright, we're relooking at a Form 8K filing from Hyperfine Incorporated. Now, an 8K is like a company emergency announcement system. It is filed when something really important happens that shareholders need to know about right away, and this one definitely has some juicy details. Basically, the big news here is that Hyperfine is selling a whole lot of its stock to the public. This is called an underwritten public offering, and it means they've hired a professional outfit, Lake Street Capital Markets, to help them sell their shares. So what are they selling? They are selling a whopping 14 million shares of their class of common stock. Think of it like this: selling a big chunk of ownership in the company to anyone who wants to buy it. And they're selling these shares at $1.25 each. This is a really key number because it tells us what price they think their stock is worth right now for new investors. Now, let's talk about the money. This offering is expected to bring in about $17.5 million for Hyperfine. That is a significant amount of cash infusion for the company, and it is before they pay those underwriting fees and other expenses associated with selling the stock. And here is something else interesting: while they are selling 14 million shares initially, the underwriters have an option to buy even more shares, up to an additional 2.1 million shares. This is typically done if the demand for the stock is really high. They can sell more and raise even more money. That extra bit is about 15% of the initial offering size. All of this is being done through a formal document called a prospectus supplement, which is based on a bigger registration statement they had already filed. Think of the registration statement as the master blueprint and the prospectus supplement as the specific details for this particular stock sale. It all goes through the Securities and Exchange Commission, or the SEC, to make sure everything is above board. This whole process is expected to wrap up very soon, around the 17th of October. That is super fast, which again suggests this offering is moving along with some pretty good momentum. Now, let's talk about the cost of getting this money. Hyperfine is paying its underwriter a commission. It is structured in a tiered way. They re-giving them 7% for the first $10 million raised, and then 6% for any money raised above that. This is pretty standard practice in the investment banking world. On top of that commission, Hyperfine is also footing the bill for the underwriter's expenses. This includes things like legal fees, capped at a reasonable $125,000. So, while they're re-raising a lot of money, there are definitely costs involved. Here is a really crucial part for existing shareholders and potential investors. Hyperfine itself has agreed not to issue or announce any new stock offerings for a period of 90 days after this agreement. This is often called a lock-up period. It is designed to prevent the company from flooding the market with more shares right after this offering, which could drive down the stock price. And it is not just the company. The company's directors and top executives are also agreeing not to sell their own shares for a period of 60 days. This is a good sign because it shows their leadership has confidence in the company's future and is looking to cash out immediately. Beyond the stock sale itself, there is another announcement about a press release issued on the 16th of October. This press release is basically confirming the pricing of the stock offering. Companies always put out a press release to inform the public and the media about these kinds of significant events. Now, for those of you who really like to dig into the nitty-gritty, this filing also includes the actual underwriting agreement as an exhibit. This is where all the legal terms and conditions are laid out in painstaking detail. Then there is also a legal opinion from the lawyers confirming that the shares being sold are legally valid and properly issued. And finally, we have that press release that was mentioned, which essentially announces the pricing details of this public offering. The last section, as expected in a Form 8K about a material event like this, is to list all the exhibits that are being filed along with the report. So we have the underwriting agreement, the legal opinion, the consent from the lawyers, and of course the press release. They also include a cover page interactive data file, which is for regulatory purposes, making the data machine readable. So what is the big picture here for Hyperfine Incorporated on the surface? This is a company that needs capital and is successfully tapping the public markets to get it. They are raising a substantial amount of money, which they will likely use to fund operations, further research and development or expansion efforts. The fact that they were able to do this at a $1.25 price point for their class of common stock, and that institutional buyers like the underwriter are willing to facilitate this suggests there is some level of investor confidence in their business model and future prospects. However, we always have to look beyond the press release. Raising money by selling stock dilutes the ownership stake of existing shareholders. If you own shares before this offering, your percentage of ownership in the company is now smaller. While the money raised can fuel growth, it is crucial to see how effectively Hyperfine uses these funds. Are they investing in truly innovative products? Are they gaining market share? These are the questions that will determine if this capital raise is a success in the long run. A key risk to watch is their ability to execute on their business plan with this new capital. The medical technology sector, which Hyperfine operates in with its MRI systems, is highly competitive and capital intensive. They'll need to clearly demonstrate how this influx of cash translates into tangible progress and improved financial performance, not just more shares outstanding. The lock-up periods for the company and its insiders are positive signals indicating alignment, but the market will be watching closely for how the stock performs post-offering and the strategic decisions management makes. Alright, that is our breakdown of Hyperfine Incorporated S-latest filing. What is your take on this stock offering and what it means for the company? S-Future, drop your insights in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more deep dives into corporate finance. And don't forget to join our Discord community. The link is in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.